I will be your host for today's briefing. Our main goal, as always with the Solution Series, is to provide you in a very short time slot with some fresh insights and practical tactics, positive strategies, things that you can use right away in today's tough business environment. To help us with that, we encourage you to drive the content for us. Let us know what types of topics and some presenters you'd like to hear from, and we will contact them, that being part of a future Solution Series program. I'd like to start the program by thanking the Harvard Business School Real Estate Executive Education Programs. They're our sponsor for today's program. These are executive education programs that are designed to give seasoned and emerging leaders the skills they need to navigate global markets and capitalize on new opportunities. If you'd like more information about these executive education programs, you can visit the website at www.exed.hbs.edu. Okay. As I mentioned before, the Solution Series is meant for short bursts of information, but some topics require more in-depth treatment, and so we have 90-minute webinars. The next one that's coming up, you can see on the screen, is on a very important topic of ROI analysis on lead building components. We're pleased to have Mary Hurley, who's going to be speaking with us from Pine Lock Management Corporation. We have improved the prices of the webinars, and so right now the cost is $65 for NAIOP members and $95 for non-members. If you'd like to register, you can see right there. Just go to naiop.org/webinars. Okay, and so that brings us to today's program. And doing the interviewing honors today is Alex Klatskin. And Alex, many of you may know Alex. He's a partner with Forsgate Industrial Partners. It's a private industrial real estate development and investment firm based in Peterborough, New Jersey. Alex is founder of the family-owned Business National Forum, of which our guest, Paddy McNeely, is also a member. Alex is also the 2010 chairman-elect of NAIOP Corporate. Paddy McNeely is chairman and CEO of Meritex Enterprises, Incorporated. It was formed in St. Paul, Minnesota in 1916, and Meritex has evolved into an investor, developer, and manager of warehouse properties in multiple markets. To set the stage for today's interview, I'd like to give you an overview of the company's history and point out a couple of milestones along the last 90 years. As you can see here, in 1916, Harry McNeely formed the St. Paul Terminal Warehouse Company. It was actually near the terminal end of the Soo Line, S-O-O, line railroad. So that was back in another boom time. But then in 1929, during the Great Depression, he actually began an expansion of the company by taking over the management of warehouses in Minneapolis and eventually many other markets. By mid-century, his son, Harry McNeely Jr., was elected to the company's board of directors. And then in 1969, we saw another first. The company entered the underground warehouse market. That's also known as subsurface space. They leased a facility outside of Kansas City, Kansas, as a warehouse for General Foods. And eventually, it purchased its own underground facility, which it expands dramatically. The following year, the St. Paul Terminal Warehouse Company was renamed Space Center, Inc. Now, as a result of some tensions in this family-owned business, in 1990, Space Center was reorganized into two asset-owning companies, Space Center Enterprises, owned by Harry McNeely Jr., and Space Center, Inc., owned by Donald McNeely, the sons of the founder. Both Harry and Donald are the sons of the founder. Shortly thereafter, Paddy McNeely, grandson of Harry McNeely and son of Harry McNeely Jr., and our guest today, begins working for Space Center Enterprises as a manager of properties in St. Paul, Minnesota. 1991 is a particularly important year because it also marks the first time that the company elects a board of directors with a majority of independent members. And at the end of the past century, Space Center Enterprises becomes Meritex Enterprises, Incorporated. 2 years later, in 2001, the company's board elects Paddy McNeely as CEO and chairman. Under his leadership, Meritex decides to narrow its focus to acquiring, developing, and leasing industrial real estate. And that brings us to today. Currently, Meritex Enterprises owns over 8.3 million square feet of industrial property in 8 markets across the United States. Now, the purpose of our program today is not just a historical lesson as to, would this happen first and then this happen second. The purpose is to talk with Paddy about how a company survives the numerous bumps in the road that had to have happened over all those real estate cycles for 93 years. So now I'd like to turn the program over to Alex Klatskin, who will talk with Paddy about how to keep a company nimble and how to navigate the additional issues of a multi-generational entity. Welcome very much, Paddy and Alex, and thanks for being with us today.
Thank you, Sheila. Paddy, in 2001, you took over a spry 85-year-old company. You were named chairman and CEO, and you narrowed rather than expanded the focus of the company. Why did you do that? What was the move behind it? What got left behind, and do you have any regrets about it?
Thanks, Alex. At the time, the business was a real estate company. We had a large portfolio. Perhaps it was 9 million square feet. But we were also heavily invested and had a lot of assets tied up in the public warehouse business, third-party logistics area. We had 6 different third-party logistics businesses, and really we decided to narrow the focus of the business because our expertise was really in the real estate investment business, the development business, management and financing of real estate. While we had expertise in the third-party logistics business, that is a hyper-competitive industry, and at the time we felt in order to be competitive and successful in that area, we were going to have to invest significantly in technology and transportation, and actually we didn't see very much profit opportunity in that business. So over the next 8 years, we've been involved in winding down our third-party logistics businesses and concentrating on the real estate aspect of the business. What we've done really too is we've refined the portfolio a great deal since 2001. We had approximately 9 million square feet of property at that time, but many of the assets were large, complex, legacy properties. Some were office properties, and we also had a significant concentration of investment in the Minneapolis-St. Paul marketplace. So at the time I became CEO, we decided it was good to clarify where we were going to take the company and why, and went about selling the board on a strategy that we felt we could use as a platform to grow the business down the road. So over the next several years, there was an unusual time in real estate beginning in 2004 with a lot of liquidity in the market. We were able to transition the real estate portfolio into a pretty homogeneous multi-tenant warehouse portfolio, and also invest in markets outside of the Twin Cities.
Right. And while you did narrow rather than expand the focus of the company and to go into real estate, you did make a decision to expand into a number of markets, many of them new. Can you tell us how you made that decision of what markets to go in and when?
We made it, in part, it's you wake up one day and you look at the company and you say, my goodness, at the time we had 50% of our NOI coming from a handful of projects, and as I mentioned earlier, those projects were largely concentrated in the Twin Cities. You probably wouldn't invest a stock portfolio that way, and so we transferred some of that thinking to the real estate portfolio that we owned. What we believe and are trying to prove is that a well-diversified, locally managed portfolio is a good investment, and our focus is on cash flows, and we believe by adding different markets and increasing the number of properties and increasing the number of tenants in the portfolio, we think our performance will improve over a single market portfolio in the long run. Now, we believe that we have to have a local presence in each of our markets, and that allows us to get clued in on what's going on in those markets, stay close to the tenants, interact frequently with brokers, and also have numerous options for tenants as their business needs change.
So as a small, privately held company, you've made some big decisions, but you have a board of directors and shareholders that help you with that process. Why did you make the decision to invest time in such a governance process as a board of directors? And what do you think the benefits are, and how did they help you make these strategic decisions?
Well, basically, and I would say this to anybody, I think the board is a really crucial element of our success, and I have to give full credit to my father. He put the board into place in '91, as Sheila mentioned in the intro, and so that's almost 20 years ago now. We have we also, there was some reference in the introduction that the business has been through a number of generations, and in generation 2, my father's generation, there had been some events, I guess, amongst family members that really almost undid the business. And I think that had there been a better governance mechanism in place at that time, we may have been dealing with a different situation. But such as it is, the board was put into place in '91. Right now it's a 7-person board with 4 independent members and 3 family members. And the other situation that we have here is that there's 7 shareholders as well, but I'm the only one that's active in the business. So the board, which the shareholders elect, is a great way for the shareholders to have their voices heard without being present in the business. The shareholders elect the board, but then the board represents their interests to management. I think most families and some family businesses certainly are pretty insular, and this governance structure allows outside perspective to come into the business to help management and also to help the shareholders, because the board members that we have that are independent have a lot of expertise and good business backgrounds, and they're out in the marketplace and they have a feel for what's going on in different industries and can help us a great deal. I'd just make one other point too. I think one of the reasons that the board's a real asset in our situation is that it helps assure the management and the employee group that business issues like strategy, tactics, the performance of the company, compensation, management development, those really core kinds of things, those business issues are debated in the context of the business. And it also assures the shareholders that issues like ownership succession, shareholder duties and responsibilities, family participation, those sorts of issues stay in the shareholder or the family realm, and that separation of those issues into their respective areas, I think, is really important, and will help our company anyway be more successful in the long run.
So while the board represents the family's interest in governance, how else do family matters affect the decision that the company makes?
It may seem like the shareholders are moved aside a little bit given the structure that I just mentioned, but actually I don't think that's the case. The shareholders own the company, and it's pretty clear in all of our minds here that that responsibility means that they get to set the goals and the objectives. Basically, what do they want their investment to accomplish? So the shareholders really they've had to be open and frank about what it is they want the management team and the board to accomplish for them. And they also have a big input on how we carry out our business In other words, the values and the culture that pervade the company. So, we can be, as a management team, responsive to that, but we can't determine that. The shareholders have the right, really, to decide at a very high level how they want the business to be run and what kind of constraints that need to be put on it. Management's duty is to help them earn the returns and do it in such a way that also presents the shareholders some opportunity to see a good return on their investment, but also perpetuate, in our case, we want to perpetuate the ownership of the business and the family. So they have to have an emotional stake in the company too. Otherwise, if they treat it purely as an economic investment, which they have the right to do, they may choose to take their capital elsewhere. And as a management group, we'd much rather have them keep the capital in the company, especially in an environment like today's.
So, after 93 years, a company like Meritex has seen many downturns. You've avoided many potholes. So besides your brilliant management, what are the other secrets of your company's longevity that you can share with us?
I read something the other day that I really liked, and it talked about business success and in a long-term nature being a blend of art and science. I really believe that that's true. In the business today, we have decades worth of industry experience and knowledge, which is terrific and essential. We certainly rely on numbers and facts to make decisions, but needless to say, a lot of the decisions we make are in a climate of uncertainty. So, it is that blend of art and science. We always try and do the right thing for our customers and any financial partners that we have in any of our properties and any of our deals. And in the long run, that wins out for us more often than not. That said, we survived other downturns, and I think one of the lessons we've learned is, they're pretty simple. We don't want to have too much debt. We like to build the business on stable cash flows. It's good to be credible and have strong relationships with lenders. You may have to improvise to get some deals done, and clearly you got to pay attention to your business. I think a lot of people in our industry feel like it was really the real estate industry or real estate economy that's given them a hard time in recent years, and no doubt that's true. But I also think that it's true that if you take a step back, any company that was over-leveraged in this environment, any company that was betting on continued price appreciation or, whether it be a share price or a product price, to bail them out of a deal that put them on the edge, no matter what business you're in, that was a risky proposition. It's just real estate being so illiquid and typically highly leveraged, it can come down on you pretty quickly. So
as your next milestone in Meritex clearly is your 100th birthday.
Yeah.
So what opportunities are you pursuing in this current economy so you can arrive at the goal of being 100 years old and having continued success?
Well, we'd like to expand the business. We'd like to expand the portfolio of multi-tenant properties that we have, and in the markets that we're in, and look at new markets as well. 2009 was pretty much a surprise. I think it was a really choppy year, a lot of uncertainty at the beginning of the year, but many people really who were acquisition-minded felt there were going to be more opportunities served up than there were. We're getting the feeling now that there could be some deals, certainly more deals done in 2010, and we may be able to participate in that. We recently purchased a note at an auction online. It was very much an eBay-like experience, I'm told. I wasn't here at the time, but we set a price. we had been able to do due diligence on the underlying property, which happened to be an empty multi-tenant building here in the Twin Cities. When the bidding stopped, we were the winner. That was a bit of a foreign feeling to us since we hadn't bought a property in quite some time. But so that's one. You know, we're focused on making acquisitions and improvising to get them done. Right now, we're also making an effort to develop relationships with institutional investors who could be equity providers to us, which would be new. Presently, we don't have any of those in the fold. And also, it was mentioned a little bit ago that in the late 60s, we began to have interest in developing warehouse space in subsurface undergrounds in the Kansas City area, and we've got an ongoing development there that's about a little over 2 million square feet of developed space now, with another 1.5 million square feet of potential development. So we're looking at development, we're looking at improvising to get deals done, and also kind of keeping a war chest ready for the more traditional, maybe one-off and small portfolio acquisitions that could come down the road in 2010 and 11.
Well, Paddy, I want to thank you on behalf of NAIOP and all our members for sharing the terrific story of Meritex and your 94-year history. So please, thanks again, and I would like to turn it back over to Sheila Bertino at this moment.
Thanks, Alex, and thanks, Paddy. On behalf of our audience, we extend great thanks to you for that. It was really interesting to hear the ins and outs of your business model. It's very clever. It seems to be quite broad-based and interesting, and I particularly appreciate your sharing the details about the board structure and the shareholder structure. I think that's an issue that many family-owned businesses really struggle with, and so I'm sure that information will be extremely helpful to them. So for anyone who would like to hear this session again, we will have it available by close of business today, and that, of course, it will be posted on the website. But also, I just want to remind you that all of the past Solution Series programs are available there on the NAIOP corporate website. That's at naiop.org. When you go to the front page, you'll see a large button that says Solution Series. Just click on that, and you'll get right on through. And then also want to tell you our next Solution Series program will take place on March 31st. So just watch your email from NAIOP Corporate, and we'll have information about the presenter and the title. Again, a reminder, if you have any topics that you'd like us to cover, you're going to get a little evaluation form after the webinar today, and so just go ahead and put down any topics, any presenters, and any feedback that you have for us. Thanks again to our excellent presenters, and thank you all for attending our session. Goodbye for now.